What's happening, guys, and welcome back to another Sunday Scan. And I hope that everyone had a fantastic week. Last week on video, we asked for a lot of feedback in the comments section of what do you guys want to see on Sunday Scan, what would add value to you, and we got a lot of great comments, and so we're implementing those suggestions. And one of them was for potential guests to have on. The overwhelming majority of you in the comments said that you wanted Taco Money from the IU chat to go on, and his name is Tim, and so Tim will join us for the main watches section, and he'll be able to describe his trading style. And he recently just did an interview with Anthony that everyone should check out that gives like his full background. But once you watch that, you'll kind of understand why he's on for the main watches section this week. He's a fantastic trader. He's very active in the IU chat. He adds a lot of value and he helps out a lot of members. So we're excited to have him on in a little bit for the main watches section. And then other than that, you guys really like the chart reviews and just kind of going over some of the thought processes behind why these stocks move the way that they do, what's the thesis behind it, and then how to really play it. So we're going to run through a couple of charts, and then we're going to get over to having Taco Money on for the main watches. So the first name that I really want to bring up from last week was IWM. And, this is the small cap index. And we've talked about this over the last couple of months, how, changing variables in the market, it basically creates a good environment for certain indexes or a bad environment for certain indexes. And so IWM, the small cap index, that does well when we have good economic data and when the Fed is talking about cutting interest rates. And so those two things are basically pretty bullish, especially for small cap companies. And so as we had better economic data come out, as you had Powell on Friday say that, we do want to start cutting rates and we're committed to that, and we have seen what we need to see in order to do that. Now you have this big, reflation of the small cap names. And so IWM was a great mover. And, around key data points or key speeches, you really just try to find the path of least resistance. At least that's what I try to do, of, when this data comes out, or if something is bullish, or if something is signaling lower rates, at the end of the day, what is moving well on that? And if like tech is, pretty choppy on it, or it's going up then reversing down, that's not the easiest way to play, a macro kind of thesis or a macro move on that. But if you look at some of these other more niche indexes or indices like IWM or even like KRE, these are the things that are the most sensitive to interest rates and to, kind of a bullish environment. And so you basically just think about if, we're not headed towards recession, if interest rates are getting lowered and we have good economic data, then that's kind of like a boom economy. And things that do well in that are things like regional banks, small cap companies, and basically things that get really hurt during bear markets or things that get hurt during bad economic times. It's the flip side. So they are the things that do the best typically when the markets are good, data is bullish, and the Fed is cooperating. And so those are two things that I just want to recap, and it's about looking for the path of least resistance if you're looking to join a trend. Just where is money naturally flowing, and then you can kind of base some of your trades or your thesis off of that. Now, the next name that I really want to get into was Riley. And this has been a stock that has, a lot of short interest on it. It's been hammered over the last, couple of years. They've had a lot of financial problems, and it looks like it's either, potentially going into bankruptcy, or maybe it gets bought for a small share price down the road. But this was a trade that I wanted to recap, and this was called out in the room. And it was basically, it fits a template that for a trade setup that I like to trade. And I basically call it like, when a highly shorted stock gets a catalyst and it causes a squeeze out, what does that look like? And that is the trade setup. It's stocks that have high short interest on them and stocks that have some kind of a catalyst that basically change the story for a moment, and basically all that short interest or a lot of it has to cover, and then you have a big blowout, and then it kind of fails to follow through, and then reality sets back in. So I just want to recap, how those trades work and what to really look for. And I compared it to the BYND trade from a couple of weeks ago, where it was a very similar kind of situation, and it played out in a very similar way. And I actually did a video on that maybe we'll link in the description of this. But here's basically the trade walkthrough. So you have a stock that has very high short interest on it, and usually for good reason. Usually they're companies that are heading towards bankruptcy, or they're just not very good companies, and you have a lot of people betting on them going to essentially zero. And so you'll have stocks that have 40, 50, 60. In this case, it had 80% short interest on it. And that can be a mix of retail people, institutions, and people who are basically, waiting for this to go out of business. So that's kind of like the first step. You need a stock with a lot of short interest on it. And then the second thing that you need is you need a catalyst that goes against that narrative. And so the catalyst for Riley was you had Oak Tree Capital saying that they were going to buy potentially 2 units from Riley. And so basically that was a deal that could be worth a couple $100 million. And so what that does is if you have a small market cap company, it's highly shorted, and you have a catalyst that kind of changes the narrative, you have people who have been shorting it are now unsure what all the details are. And basically, if you have new buyers come in and you have all that short interest that needs to cover, you can get these spectacular moves from, they can go up 100% sometimes or 50%. And if you're kind of familiar with which stocks have that short interest on them, and if you're able to recognize a meaningful catalyst, you can anticipate, and if the action confirms it, you can trade some of these stocks. At least that's how I like to trade some of these. So with Riley, very low volume, very stagnant, and then you had the catalyst here, and you had that first halt up. And so that's really where I got interested, around that 580 level, 590 level. And that's where I took a long position on this. And this is the exact same playbook that I used, to describe the BYND situation from a couple of weeks ago, where that had high short interest, it had catalyst, and it's a process of recognizing that it will squeeze out and how far it can go if it does squeeze out. So after you have that catalyst, you had a halt up, and then you basically are familiar with the short interest, and you know that if this is very heavily shorted and it's, kind of thin, like on the tape, then it can usually have some great range to the upside. And what I tend to do is I use the volume to basically keep me on track. And I say that the volume in these situations usually mirrors the stock action. And so what I'm looking for is after that first halt up, I want stocks that are continually getting increased volume, because that is showing me that the short covering is happening. And so I want increased buying, I want it to be holding candles, and I want the volume to start to reach a plateau up here. And I actually got some of this was, the luck of the draw. I was able to exit right around, 890 or somewhere in there. But this was a very clean trade, but using the volume profile to help keep you on track of when to get in and when to get out. That's a very powerful tool that I like to use to nail some of these kinds of trades. And so, from the 590s up until the 890s or so, that was a very clean trade with equity. And then, once that cover comes in and once the shorts have been blown out and once you have longs chasing it, then reality starts to set in. The demand supply profile changes, and now it flushes back down, and now the longs are off sides. It'll retest and then fail to follow through, and you can have some very clean unwinds in these trades as well. So I just wanted to do a quick recap on that. And when you recognize these in the future, stocks that have very high short interest, something that has a catalyst that changes the story, it causes new longs to get in, the old shorts to cover, and that process of basically all the old short interest being covered, that creates the squeeze. And I like to use the volume profile to keep me on track of what that will look like, because in these situations, the volume profile and the stock price tend to look very similar. And so looking at the volume and anticipating what that will look like, that can help to keep you on track for these moves. And then the BYND trade, that was the very similar one from a couple of weeks ago, where you had that same process of, a heavily shorted stock, you had a catalyst, and you had this big squeeze out, and you had the volume profile mirror what it looks like. And so that is another example of how these can, really play out. So the next stock that I wanted to cover was GDC, and this is one that was very active over the last week. You can see that it was holding those higher lows. The volume was coming in, and this was like a crowded short name that was very thin on the upside, and so it got very trappy. And you could tell that there was someone in the level 2, action that was supporting this. Possibly trying to bid it up for an eventual equity raise or something. But on Thursday, I believe, you could start to see some giant bids pop up in the level 2 box. I think there was, 700,000 shares at one point. And, when you have something like that, you have someone who wants people to see that there's a large bid in there. And they usually want it to scare shorts, to try to cover. They want to get more longs in there. And what they're trying to do is to prop the price up so that it gets as high as possible before they announce either an offering or something, some kind of, dilution usually to raise some money. And so if you have a fund or someone who is purposely trying to, show their hand in the level 2 box, that's usually a sign that maybe something sketchy is going to happen within the near future. So, kind of two notes on this. If you're playing this on the long side, that can be something to be cautious of, that when you start to see those large bids, they want longs in there, they want shorts covering, and that is going to change that supply and demand profile of it, where you're going to get it more and more long heavy. And then if they do an offering or if they do something that kind of knocks the story out of place, then now you can have those names that fade a lot. But yeah, it's just a gamified tape, and that just means that someone is in there kind of controlling or guiding the price action as opposed to a natural market with just buyers and sellers. So something to be aware of on both the long side and then especially on the short side, where it's, you don't want to get in front of something like this with a low float, a low market cap. Someone's in there, they're gamifying the tape. And, who's to say that they couldn't take, a couple $1 million and swipe it one way into a circuit halts and then not let shorts out. So these are names that, unless you're very familiar with how these play out, it's usually better to be more hands off or play with small size and anticipate much wider range than anticipated on these. The next one I want to go over was FFIE. This was a great example of a kind of a washed out trade that just has a big bid come back in. So you can see there's a few names like this where, they've been reverse splits, they've trended down, and they're just at, 52-week lows. A lot of shorts are in there. They get more and more aggressive. And then all of a sudden you have some volume come in. They kind of clean up the tape and it's still under, around 52-week lows, even after it gaps up. So those a lot of times are the names that catch people off guard because, it's up a certain percentage on the day, so it's most likely going to fade back down. But if you were to zoom out, this is still way, way, way down from, any recent period of time. And so even though it gapped up, it's more just like a small bounce in the grand scheme of the big sell-off. So you really don't want to get too aggressive trying to short these pops until they've really, played out, had a big blowout move, the volume changes, they fail to follow through, and then you can see more of a backside move. But Nate really likes to play these names on the long side, and then once they kind of make a turn, then, waiting for them to set up on the short side as well. And then using kind of key levels to keep you on track, that can be a big benefit for playing these, because as long as it's going up and flushing down, you draw key lines under those areas. And then once you eventually have a big blow off top and then it starts to slam down and then start to retest those areas, that's usually when you're on the backside of the move. And you can see the volume profile, change after that capitulation as well. And then finally, a very similar situation was MULN, where it's just in a different process. Again, these, reverse split names, or these names that have just been, sold off super hard over the last couple of months. You have shorts very comfortable in them, and then suddenly they have, a bid pop up, shorts get off sides, and you have that big, kind of swipe back. And, you just don't want to get on the front side if you're waiting for the short, and you can actually get some good long trades on these if you're able to see, the volume profile is changing. It's still under 52-week lows, even after it's popping up. So that's usually a sign that, it could have a nice pop before the eventual unwind. So those are really the names that I just wanted to go over really quickly, and Tim and I will go over some great names on the main watches section. But before we get into that, I want to disclose that neither Tim nor I are financial advisors, and these are not buy or sell recommendations, and these are for informational and educational purposes only. Now let's bring on Tim Taco Money. All right, we got Tim Taco Money on this week. Tim is a fantastic trader. He's been in IU for a while, and he's really a success story to come out of it. He recently did an interview with Anthony, and so you can go and look on the Investors Underground YouTube page and watch that. And it really just gives a good summary of his background, how he got into trading, the kinds of setups he likes to trade, and then really his progression of being a new I member to being in there for several years, and then really just becoming a fantastic trader. So, Tim, welcome onto Sunday Scan. I've been wanting to get you on here for a while, and you are the most requested person in the comments of who people wanted to see on here. So, welcome.
Hey, Chris, how you doing, man?
I'm good. I'm good. Yeah, I'm just super excited to have you on. And for people who are not super familiar with you yet, I recommend that they go back and watch the interview that just dropped. But just as like a general overview, you've been in IU for 4 years, 5 years. You've learned a ton from Nate, and you've really made your own trading style. And people can follow you on Twitter, and you put up some fantastic numbers. You're a very consistent trader, and we just wanted to have you on here to share your thoughts. But for people who are not super familiar with your style of trading, what kind of setups do you like? What are you looking for day to day? And how do you kind of view the market?
So I trade everything. I trade small cap, mid cap, large cap. I'm mainly a short seller, but there are cases where I go long, especially in small cap when I recognize that it's not a short and it's a squeeze. I will long them, and so that's what I typically trade on a day-to-day basis. And I just mainly focus usually on the day to day. I mainly focus on the small cap first. If there's nothing, then I'll go and look at the large cap. But recently, we have a lot of action and volatility in large cap, so it's kind of trading like small cap. So I focus on a lot of plays in large cap lately as well.
Yeah, definitely. And that's something that you touched on in your interview where it's, using key levels, using the same kind of setups, you're able to trade large caps with good volatility, stocks that are in play in a very similar manner as small caps. And your style, it's like if you get on the right side of a trade, if you have a good read on something, and let's say you're shorting NVDA or something on one of those big unwind days, something that you're really good at is you'll have your key levels on there. You'll wait for like a failed follow through setup. You'll start in and then you'll just add, and you can get very aggressive adding to a winner. And one of the benefits of trading large caps as opposed to small caps is that if you're trading the way that you do, you don't have to worry about a swipe back up into a circuit, going the wrong way with NVIDIA. So you have more time to make those decisions. So is that something that you appreciate about large caps and your kind of transition from small caps to large caps over the last couple of years?
No, you're absolutely right. When I'm trading large cap, I'm not too worried about one of those random swipe midday or whatever. And then whenever there's a trend, whether I'm long in small cap or short, there's a trend, and usually that trend stay consistent throughout the day. So I'm just following that trend, and so until the trend changes, then I can make the adjustment. But most of the time, once it build a trend on, especially on the long side, every dip it getting bought up, I'm just supporting it. I'm in there on the dips. And so just follow the trend. And they usually, if the trend works out well, it usually ends at the high at the end of the day or the low at the end of the day. And so there are more, I wouldn't say easier, but the pattern is a little bit better versus small cap. So when I trade large cap, I trade a little bigger than compared to small cap, especially when I'm shorting small caps, stuff like low floats. I'm very cautious of what I'm shorting into, where I'm shorting, and there's a lot of traps and stuff in small caps, so I don't really worry about too much of that in large caps. But there's certain day when large cap, if I'm somehow end up on the wrong side of thing, I usually just cut my losses pretty quick, and I don't try to fight it. I like once or twice. If it doesn't work out, I'm moving on. I'm not being care if I'm going to miss the trade later. That's fine, but I'm not going to sit there and try to fight it all day. I've done that before, and so I've donated up to in those situations where I know I'm not supposed to be in them, and so it helps in the long term.
Definitely. And being able to recognize some of those traps, especially on the short side and in small caps, I feel like that is what was a big turning point for you to recognize when to go long on those. Where it's, if you have some low float, small cap, it's super crowded, everyone's trying to short it, and it slams down, rips right back up, holds a key level, starts to base, rips down, comes back up. You're in there and you're flipping your bias to long. And even if you weren't planning on shorting it, you could recognize when shorts are starting to get in trouble. And you've had a lot of winners that way of really recognizing when someone's stuck, when there's a trend still in play, and it's kind of going to reach a crescendo or a grand finale at some point, and that's kind of your exit. So you're very good at getting a read on those names, and then you share a lot of your trades and your recaps in Investors Underground, and you're very helpful, especially in the lounge and in the momentum room. Coaching people through your thought process. And I know that you're also very welcoming to new people. So you've just been a great asset to Investors Underground, and we're just happy to have you there. But we really wanted to just get your main thoughts on what are you watching for the upcoming week? What's your overall take on this market? Are you pretty much day to day? And then we'll pull up some charts and we'll see what you're watching for the week.
So for next week, one of the big one in the overall market is obviously NVDA earning on August 28th. I think it's on a Wednesday. And so going into that one, I don't plan to trade it going into the ER unless we have a parabolic move, unless we have some sort of crazy move back up into the all-time high, then I may have an interest in shorting that. But preferably, I want to see what it's gonna do after ER. If it, after ER be gapping up into that level and we having trouble there, I don't mind shorting and looking for a fade up that level. If we blow all the short that came in, that's shorting on this bounce, blow them out over and possibly fail follow through, sit back under and fade. That's another way I would look at it. And so but I won't fight it. If it gap up and it's just so strong and it looked like there's a uptrend with it, then I'll give it a try, but I won't just sit there and try to fight it. Or another play that I think possibly can play out is even if it gap down, and I will be interested on pop. Ideally gap down and there's put throughout the day there's a VWAP, and then if it pop, toward that, I can short it and risk off the VWAPs type of trade. And so those are the, a couple of scenarios I will look for NVIDIA next week. I think we're going to have a lot of volatility going to the ER and coming out of it. And so that's going to be my main watch. As you can see on the daily, I have two level here. One is the all-time high around 140.76, 75. And then the other one is around 135.80s. And so those are the two key levels I would be monitoring going to and now coming out of the ER. And then the next one I have is ASTS. For this one, I'm watching for the daily fail follow through level. And right now I have it at 32. As you can see, there are some weeks here that every time it's coming down, it can buy it back up. So next week, throughout Monday, whenever, throughout the rest of the week, I will be monitoring that level of 32s. Ideally, it fell under, come back, retest, fell, come back, retest, and fell, and then confirm that it fell follow through. And then I would look to fade it back toward the 28th level. That would be awesome. But ideally, even lower, maybe back to the 25s area, 2580s area. So this is the area I would be interested in risking off 32. And this type of setup, on my interview, you've seen a lot of this type of setup where I draw a line on the daily. Once it break under and it confirm that it won't coming back, usually they offer a really nice pay throughout the day. And so this is also one of my main watch next week for as well as NVIDIA. And then the other one is Mira. So this Mira. So this one is it gapped up after hour of yesterday. And so this one I'm interested in is because this one have some sort of ketamine drug study. It's a rat study. And this one is there's a big day here where it's completely just run shorts over from around one all the way up to five. And this one have a really big volume day, right? 150 million plus volumes. And so I think there's a lot of people that's still stuck on the long side on this one. And so all these on my key level that I can play off right now is ideally the first spot that I will be looking at. That doesn't mean I'm interested in shorting it, but I want to see how it react around the 2.8. And if we get over that, I want to see how it react around 330 and then 370s. So there's three major key level here that I can use if I'm interested in shorting. But depend on how it looking like, in pre on Monday and post open, see what it does. So, but this one I can see if it gapped up in pre all the way to 330 plus 370 plus, I can see it could offer a potential fader um, um, once one is worked out the short off the open. I can see it fade. So this one definitely on watch for me on Monday. I think this one have like around 10 million float. So I think I can trade some okay size on it. So and then the next one I have is PWM. This one is also on watch on Monday. So this one, it does have a history of squeezing out before it fades. So this one I want to be extra cautious as well because this one have 4.5 million float. So if I'm trading this, I'm trading very small. But in the fact that it have a history of fading, that's what I'm interested in. So this one after hour, it gapped up to around 150 area. So if we somehow get over to 220s, and I want to see how 220 react, since this is a smaller flow, it can go a little bit further than people think. So I'm also have that expectation that it could go a lot higher than this, but this could be a good spot to monitor next week on Monday. This one, the reason it gapped up because it's have like an acquisition agreement to buy another, I think, companies for like 4.5 million. So it could be some bogus news. So because a lot of this Hong Kong-based company, this is put out a PR. And then another watch I have is Lumen. So this one been running for a while now, and right now it looked like it have some exhaustions into the 660, 670 area. You can see here how it came up and it kind of faded off of that. So there's a wick here on the intraday. You can see here as well. So this the area I will be watching, monitoring. If it come back to this area and it have trouble again, and I could see myself starting in and kind of use this as a level as a guide for the trade. But if I'm trading something like this, I would be starting in and kind of use it as a guide. I'm not going to go like 50% or 100% side and just risk off of that. I just want to have a starter in this area if it does come back and see what it does. If it's confirmed follow through under it, then I'll continue to wait. And then once it starts to fade away from this level, then I'll slowly add into it. But this one, keep in mind, it has a catalyst sometime in September. I don't know exactly when or what it is, but I just know that it has a catalyst. So it could continue to have a bit supporting this going to the catalyst. That's one way I'm looking at this. Also, I have another level like around 550. So if it doesn't come back and test this exhaustion area between 660 and 670, I can, if it follow through under 550, that's also a spot that I would like to start in and kind of risk off and look for a fade back to 450 area. And so those are the two scenarios I will be watching Lumen all of next week. And so that's all I have for on watch for next week.
Excellent. Those are great. And really just to clarify, like the failed follow through, the kind of the thesis for like shorting some of these names, and this is something that you are excellent at and Nate is excellent at, is that you'll basically draw lines on your charts to be like, where are key areas? Where are areas where a reaction will happen to that? So it could be where price is traded a number of times. It could be where a lot of volume was traded. It could just be where a lot of touch points are on a chart. And then it's really a thesis of like, okay, if I think that a stock is going to ramp up and exhaust out into that level, what that really means is that, if you have people who are shorting it or anything like that, they all get blown out and, longs start to get a little bit aggressive right at that same point at a key area. And so basically what you have is you have supply and demand flip at that area. And so it goes from being supply restricted and demand, coming in until that flips up into a level where then you have a lot of longs in there. There's no more shorts left because they all got blown out. And now you have a lot of supply up there. And if it starts going the wrong way, that's how you get that big flush. So yeah, it's just to clarify, that's kind of the process of drawing these lines and then having a thesis of, I think that this is the peak of this kind of spike and it's going to start fading back down. So then you guys put on a starter. And then it's like, if it starts to act how you think it's going to act, you will add to that as it fades back down. And that's kind of the process of successfully shorting some of these names. Is that a correct characterization of how you're thinking about this?
No, that's absolutely correct, and you articulate way better than the way I say it. But that's absolutely right. And usually, I'm having a hard time kind of explaining that to people whenever people ask me to explain. But now that you give me the template, I'll rewatch it. So I'll make a note of it, and if people ask, I'll explain it the way you explain it really well. Thank you.
Great. Yeah. And I mean, that's really what it is. Like with all these theses around, these charts and everything, you're really just trying to gauge what is future and supply and demand going to do and what does that profile look like. And when you have something where, like, say on these low float runners, you have very little supply and you have a lot of people shorting it and you have some new longs coming in. And so if you have people who are shorting it and then they start to get squeezed, they have to cover, that's a form of demand. And if you have, the price rising, a catalyst, you have other demand, coming in, and that's what moves it up. And it's not until that goes, really far, all the shorts get stopped out, and now you have a lot of longs chasing it, that flips the demand and supply profile. So now that the edge is for a fade back because now there's a lot of supply up there as opposed to before on the way up when it was very thin with supply. So it's really just, I sometimes use the analogy, and not everyone might know what this is, but there was something called like a rain stick, where it's just like a tube with like a bunch of like, pennies or rice or whatever, and people flip it back and forth. And as you're doing that, you can kind of feel the momentum shift. And that's really like the analogy of that supply and demand shifting from something being, very thin on the supply side and demand coming in to it gets to a tipping point where that starts to shift. And now the edge is the other way. So that's really what the process of finding some of these names is all about. But those were great watches. And then I will share my screen now, and I'll get into some of mine for the week. So the first thing that I'm really looking at is IWM. And we had some news that earlier in this video I'll have talked about, but IWM was running really well about a month and a half ago. And that's where the Fed was talking about cutting, and you had some good economic news. And then you had, a big blow off day, and then it slammed back down. You start to have some bad economic news. The Fed was saying they're not going to cut. And so you have all these kind of variables that shifted small caps, which is what IWM is, from being really good to, it was down in the dumps for a couple of weeks. Now you start to have some better economic data. So you're starting to get back into like the reflation side of that. So I'm watching IWM as kind of the go-to for where potentially money could be flowing back in with some of the macro things going on. And I think it's just going to be a very similar setup to what was happening before, where, as long as you have good economic data, this will be the best moving index. And I think that some of like the tech names, they're going to be going back and forth, especially with NVDA. That's going to be driving that. But I think that things like, crypto, gold, and some of these small caps, they do well when the Fed is about to cut rates and economic data is strong. So this is kind of a path of least resistance on the long side up until, we get some news that might change that story. But IWM will be on watch for me, especially for call options. And it's really just about, finding areas of where does it dip, where does it hold trend, and then as long as money is still flowing back into it, you have like a supporting bid in there that kind of helps to keep you on track. So that's the first name that I really have on watch for the upcoming week. Another one is Redfin, so RDFN, and this is a similar kind of thesis where real estate. If the Fed is going to start cutting rates, real estate is something that is going to pick up. The activity is going to pick up, and that benefits Redfin. So after Friday, we had some news with Powell saying that they're going to cut rates. And so, you had a lot of real estate names start to go crazy. And some of these can almost remind me of the turnaround stories of like the CVNAs or other things that we talked about in the past, where they go from being like looking like they're about to go out of business, and then you have some factors change, and they go from really bad to just kind of mediocre, or like not in danger of going bankrupt or anything. And so they start to kind of reposition, and you can have some of these names that are not necessarily that great, but if they get a macro tailwind or something changes about the story, you can have the shorts from the last cycle kind of fighting this as it goes up, and then you'll get a big blowout. So as long as this is trending, I think that this could be a name that could go higher until we get into like a big blow off situation. And then just like how Tim is watching stuff, you can wait for a failed follow through, and then once that supply and demand profile changes and you have a lot of longs in there and everything, then you might have a nice fade back down. So this is on watch for calls up until maybe the end of next week, or if we have a big blow off move, and then I would switch my bias to potentially puts for that. And the next one that I have is PTON, and this is a very similar kind of thought process as Redfin or some of the other ones, where small caps are hot. Some of these names that you have like a whole group of them. You have like AFRM, UPST, CVNA, it's just all these names that have high short interest on them. They're, hated stocks, and, they start to get some kind of a change in the story. And this reported earnings, and they are, had a slight improvement from what they were doing before. So that can really lead to some nice moves higher. But I'm just looking for names that are in play. They have range. I have a general thesis on them. And then, if I'm watching them on the long side, see how they handle dips, see if they're showing relative strength, and then I kind of play them with calls up until a big blow off. And then I usually flip my bias for like a mean reversion trade with puts. And then next we have Mara. So same kind of story. Small caps are running, crypto's running, and I think that some of these crypto names like Mara, Coin, they will all follow kind of the price of Bitcoin. And we talk about like these anchored trades, and it's really where you have certain stocks that are tied to something. So we call like Bitcoin the ship, and then these are like the anchor. So if the ship moves, what does it drag with it? And that's really what we're looking for, is just a very clear, if we get a big run up in Bitcoin to, 68, 70, maybe makes all new time highs, then all these stocks are going to play catch up with it for the most part. And then the last name that I have on watch, and last week we talked about some of the China names kind of running again on some positive headlines. And Baba actually had some company specific news with a new listing. So this could have an extra bid going up for a little while until China has its next set of negative news, and then it'll be a mean reversion trade. So this is on watch for possibly calls and for an additional run up. And then as we get overextended or into a big expiration, then I could flip my bias for puts and then play it back down. So those are really the names that I had on watch for the week. And then Tim, did you have any final comments or things that you want to chat about?
No, not really. I just hope that we all going to be prepping for next week, because I think next week's going to be really big turning event for the short term in the market with NVDA, because NVDA right now is top of the market of everything. And so depending on that, how playing out, we could see a lot of things kind of maybe turning back or continue to go upward. And so I wouldn't be at my desk on Wednesday for sure all day monitoring it.
Yeah, definitely. And, NVIDIA is such a driver of the sector that even if NVIDIA does, well, we have to watch and see how are the other names reacting. And if NVIDIA has like relative strength and all the other names are weak, then what I like to do is I like to focus on which is the weakest of those names if there's a new trend developing. Or if NVIDIA, gaps down, the other names are strong. I'm always just looking at, how's the sector moving? What's relatively strong? What's relatively weak? And then I'm trying to ride a trend until there's like a big, a sharp turning point in that. And then I try to do the mean reversion. So I will absolutely be watching NVIDIA with you next week. And I think we had a lot of great watches for people to consider. And I'm glad that you were able to come on, explain your thought process. And definitely, guys, check out Tim's interview with Anthony that just dropped. And you can hear all about his kind of trading journey and how he, got to where he is today. So, Tim, thank you very much for joining me. This was great. And we'll have to have you on again.
Thank you. Thank you for having me.
Absolutely. All right. Have a great week, everyone.
Bye.
Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.